Everyone, this is Rob Roy of Elliott Wave Options, and welcome to this week's U.S. Market Update. We had our live show over on the Hub Financial channel earlier. If you'd like to join us for that, go over to the Hub Financial channel here on YouTube, register, and you can join us every Friday afternoon for a live Q&A. Taking a look at the markets here, you can see that the S&P did move to the downside, and on your screen now, you'll be seeing the stocks that we're going to cover in this week's U.S. Market Update. And as a quick reminder, you can go right to the stock if there's a particular stock you're interested in the chapters feature on the recording, and not have to wait till we get there. So that's a convenience for you if you're interested in doing that. Otherwise, we'll be covering all those as we go throughout the market update. So you can see that we moved to the downside here once again today. Although finishing just ever so slightly break even to the upside. We are a little bit oversold from the 10-day moving average. Now, I've been talking about for quite some time that the retracement would probably go down to the 440 level. And if we broke that, it seems to me like there's not much left until we come down and hit 420. Do we bounce first? Do we go down to 420? I'm really curious to see what you guys think. Post a comment as we're going through this corrective mode. How far do you think it's going to go? Do you think we'll get to 420? Remember, if you post a comment underneath the video, you're registered for our free giveaway. We're on a push to get to 40,000 YouTube subscribers. Somebody asked about it last week. Have there been winners yet? Well, we got to get to that 40,000 level first. And everyone that posts a comment is registered. And we're going to give away 4 of our level 3 subscriptions. And that includes our impulse strategy, which is the directionally based strategy, our volatility strategy, which is for triangles, and our time strategy, which is our AI-based strategy for sideways movements. So it gives you all markets covered, up, down, or sideways. So please make sure to post a comment and get registered. And while I'm talking about that, if you like these videos, please don't forget to hit that like button, or better yet, hit subscribe. You'll be notified immediately when one of these videos is posted. Thanks. We really appreciate it. You know how all this works. All right, so that's my question. Do we come down to 420? I think we do. The only question I have is, do we have a little bit of a bounce? Do we test that 440 level first and come back up here before moving to the downside? Now, the economic news that was released today showed that retail sales are still pretty good. The consumer is still spending on credit cards, but we're still spending. So I thought we'd go ahead and take a look at a couple of the big old retail stocks. That's Amazon. And you can see we had the big gap up on earnings, and now we've come back down to fill the gap. How many times have you heard me talk about gaps get filled? We've done the data, we've done the research, we know they do. We just don't know exactly when. So we're moving down to fill that gap around 130. So no harm, no foul here on Amazon. Probably acting better than most of the stocks in the market right now, still above the 50-day moving average. So the key here on Amazon is when we make it down to 130, which I think is where we're going, can we hold that level? There's a lot of support. You have the 50-day moving average. So if we can stay here and hold this level, perhaps we can bounce from there. Just depends on how weak things start to get in the rest of the market. I think that's going to be really interesting to see. And Visa, of course, you see that that's holding in there as well. And that goes along with that retail sales number. People are still spending, at least for now. At some point, we're going to run out of credit, you would think. The government doesn't, because we can just keep printing money. But as individuals, we don't have that luxury to keep printing money when we need it. At some point, we have to pay the credit card bills. So we're down here at a level on Visa, right there around 235, where there's a lot of support. And if I put on the earnings report, I've mentioned this, the fact that I think if you are looking for some place to park money, perhaps we hold this level going into that next earnings report. But I think that that next earnings report may actually show a bit of a chink in the armor on the consumer. So perhaps we go sideways, even a potential bounce going into that earnings report. But I'd be really nervous on Visa going there. And if we break below that level, I think we can start looking at levels. There's some support there at 230. If we can't hold there, then we're looking at that previous wave 3 high all the way down around 220. So it's going to be a pretty good precursor. But those two stocks both showing exactly what that retail sales number said, that the consumer is still spending. All right, let's look at the bond market through the TNX. You know, we talk about this all the time, and we talk about this at TradeFinder every single week. It's really important to me that people understand to be a good equities trader, you need to have at least a working knowledge of the bond market. So we talk about it on Tuesday night during TradeFinder each and every week. And by the way, if you haven't registered, register for TradeFinder. It is free, 9 p.m. Eastern time. We talk about the markets. We talk about potential trade ideas, and we also have a live Q&A at the end. We have a great community of people. Great questions are asked, and you know that's kind of cool because you may hear a question and you're thinking, oh, hadn't thought of that. That's a good question. So TradeFinder is a great thing, and as I said, it's free. Looking for trade ideas as well. But each and every week we go through and talk about what the bond market is telling us. And this big run to the upside here, the concern that I have on the TNX is if we walk it back a couple days, you can see we had this wave 5 to the upside at 4.3%. Felt like that's probably where we're going to go. That's where the wave 3 was showing us. Well, we got there and the Elliott Wave chart relabeled. That's what happens with this Elliott Wave program. And if you're new to this software, if you haven't seen it before, it's from the Hub organization, HUBB.com. I think it's the greatest Elliott Wave software that exists. So take a look at it and see what you think. I'm a big Elliott Wave fan. I've tried all the Elliott Wave softwares that I believe to exist, and I think this is the best one out there. It's programmed exactly to the algorithm as Ralph Nelson Elliott wrote. And you can see that not only does it work for equities, it nailed the TNX as well. So a little bit of a pullback, but we are a little kind of above the 10-day moving average on interest rates yesterday. A bit of a doji today. So what is that going to mean going into the beginning of next week? Does that mean that we're going to shoot back to the upside on rates? Because now, because we hit that 4.3 target, now the next level that the algorithm is reading is 4.6. Are we going to get to 4.6 on the 10-year? Gosh, if we do, that's not going to be good for tech stocks, the Magnificent Seven, etc. It's going to be rough for those. Rates moving to the upside. Question came up in the live Q&A today. Why? Why is our interest rates moving to the upside? And to me, it just shows economic weakness. You would think with rates going up like this, the fact that money market accounts, T-bills, all these different places that you can go to park some short-term money with banks are paying 5% or more, and you don't have to worry about the risk of the equities market. So why wouldn't people be piling into the bond market with rates moving higher? And I just feel like that could be a sign of global weakness. And if we continue to move to the upside, it's going to be hard for the equities market to turn and move back to the upside. So another reason why I think that 420 level is probably in the cards. Then we look at the dollar, and this one had also relabeled, and it did that because we hit the previous 4. It was at the 61.8% level. We got up here. We were hoping maybe we would turn down, create some sort of a bid in the metals. It's 61.8 is a strong fib level, and we went through that, which is impressive to me. So once again, money moving into the dollar. Why? Probably global weakness. So I think there may be some undercurrents globally, that some of these economies are maybe a little bit weaker than what we have been led to believe or what we've been seeing so far. At least those two indications are saying that. And with the dollar moving up, certainly we're not getting the bid that we were hoping for in the metals. There's the SLV. Now, the one positive is it is really being stubborn and holding in at this 21 level. So we get here. If we can hold that level, then maybe we get some sort of a recovery to the downside in the dollar, a weakness in the dollar, if you will, and that can generate some sort of a bid in the metals. So far, so good. I think you would agree. I'm going to show the GLD in a minute, but the importance of holding this 21 level on the SLV is if we do break below that level, and a lot of stocks are breaking below their 50-day moving averages, etc. We're below the 50-day moving average, but we're hanging right in there on the 10-day moving average. But if we break 21, then gosh, look out below. I think we're probably coming down to this 18.5. Not quite a Katie bar the door type scenario where we look for some sort of a big, massive move to the downside. But you can see clearly that there's support all the way down at 18.5. And I think that becomes a good short. But so far, the SLV has hung in there pretty darn well. I hadn't planned on showing the GLD, but I think I'll just go ahead and add that one in there because the charts are a little bit different. So you can see that while the SLV has held in there, the GLD is just marching lower. That's what you would expect to see with the dollar moving higher. So it begs the question, who's leading? Is GLD leading or is SLV? SLV staying pretty stable and strong, at least sideways. While GLD is moving to the downside. We used to talk about how GLD was big brother and SLV was little brother, and then it seemed like they swapped. Silver is used in electronics, etc., and SLV seemed to be the leader. They're not in sync. They will, in my opinion, become back in sync. Usually when these things get out of whack, it doesn't last long, but which one's going to be the right one? So is SLV going to break down below that 22 level and head lower, or are we going to get a bounce from GLD here at a potential level of support right here at 175, and that level holds on SLV, and maybe then we get a bid? But I think we're going to have a little more weakness than just some sort of a rollover in the dollar. I think it's going to take more of a significant move. So if I had to make an assumption right now, I would say that probably GLD breaks below 175, and then SLV gives up the ghost. But the market's going to do what the market's going to do. And if the dollar can change, but to break above that 61.8% level, I can't emphasize that enough, was really eye-opening for me on the U.S. dollar. And as you're all probably aware, Bitcoin, holy cow. We get these end-of-day charts. We don't have the end-of-day print yet. So I've drawn the red line. This is exactly where Bitcoin is trading at this moment. It trades 24/7, but just like futures, etc., you do get an end-of-day print. But when we see that, you're going to see Bitcoin down here around 26,000. It held that 29,000 level for so long. We've talked about it week in and week out. Could we bounce from here? Is the halving thing in the beginning of next quarter going to spur Bitcoin to the upside? I asked you all to post a comment last week, and not really many of you did. So I don't know if you're that excited about Bitcoin anymore or not. But the bottom line is 29,000 gave way. So now we're down here at 26,000, which is right at the top of that wave 3. That level, gosh, if you look at this, if that doesn't hold, then we're in a whole different scenario as far as what could occur with Bitcoin. Then we're probably looking at maybe a move all the way down to this previous 4. Now, the positive scenario is the fact that the wave 5 on Bitcoin went above 100%. If the wave 5 goes less than 100%, you do look for a retracement to the previous 4. It didn't do that. So the fact that it went above 100%, what you look for is a 61.8% corrective move from that wave 5. And that brings us down to just around 25,000, a hair below where that wave 3 is. So somewhere between 25, 26,000 could very well be the next move in Bitcoin until we see if we're able to catch some sort of a bid. So the correlation, it seems, with the weakness in the equities market has moved into weakness in Bitcoin. I think there was a time when you could have argued that Bitcoin was its own animal and they weren't really correlated together, the market and Bitcoin. They seem to be now. So weakness in the market, weakness in Bitcoin. You look at that from a risk standpoint, I think, and that's the issue. Looking at our other markets, the DIA, we broke below 350. Wasn't likely to hold, and it didn't. It was trying, but it didn't. So we've broken below that. You look at the 10-day moving average, we're below that. Little bit oversold here as we are on a lot of the markets, but breaking below the 50-day moving average, again, eye-opening. You can see a lot of these charts breaking down this week. So a lot more weakness being shown in the markets than what we've had for quite some time, even with some consolidation. It hasn't been that weak, but they're breaking down now. Looks like 340 is the next stop for the DIA. Can we hold 340? If not, then you start looking down at 330, and it's almost like stepping down. You have these blocks of 10. If we can't hold 330, then we're probably going back down to 320. But there's support along the way. Any one of these points could bounce, but breaking below 350, the 340 level being next, hopefully that holds. If you're long the markets, if you short the market, you're starting to get excited. We haven't really had great shorting opportunities in the market since 2020, when the pandemic started, and we had some great downside trades there. I love trading to the downside, especially in the world of options. It's where you can make a lot of money in a lot shorter period of time. Good time to become an alert subscriber at ewotrader.com if you haven't already, unless you feel pretty confident on trading the downside. I hate saying that because I know more people do well when the markets move to the upside, but the fact of the matter is we make money faster when it moves lower. The Qs, with that chart of the TNX, interest rates moving up, and then you see the Qs, and here we are just kind of in no man's land. 360 needed to hold. It hasn't held. So it looks like the next stop for the Qs is 340, and that's not a whole heck of a lot of support there. So what's concerning here is the real big support on the Qs is down here at 320. That may very well be where we go before we get any sort of a bounce. This hawkish tone out of the Fed is not helping any of this. And we had a question last night in our insiders meeting of what changed. The market seemed to be continuing to go to the upside. What changed? What moved things? It was when Moody's downgraded those regional banks. That just seemed to be, that was the excuse for people to start taking profits. That's what happened. And then we've got all the data piling on since then. The Russell, pretty darn ugly. And if you look at the Russell, the small caps, as a lot of people do for a signal of risk taking, you can see that we've broken down. We broke down below 190, didn't even really attempt to hold it after breaking above it. That 170 to 190 was the range. If you've been watching us, we did have that period of time where we had a tightening of the range between 170 and 180. So we broke up, tested 190, came back, tested 180, got above 190. Here was the test. It's a failed test. We are a little bit oversold on the IWM right now, but it certainly seems like whether or not we get a quick short-term bounce at the beginning of the week next week or not, 180 is the next level for the IWM. We'll see if that can hold. But like I said, we are oversold from the 10-day moving average. No security in any time frame, gets very far away from the 10-day moving average. Perhaps we get some sort of even maybe a test back up to 190. But you can stay oversold or overbought for short periods of time, not long periods of time. So my point is we could just go straight to 180 at the beginning of the week. But if we got down that far, then I would say, hey, you might have a short-term upside trade here just from an oversold condition. We should add the VIX into the mix here because now a whole different game. So we had broken below 17. 17 was support for so long on the VIX. We had that wave 5 down there at the 61.8% level. I said it would be impressive if we broke below that because it's such a strong fib level. We didn't. The dollar did, but the VIX didn't. And so we've come up and tested that 17 level a couple of times. But now, look, we broke above it. Now you look with that move down today. Are we coming down? Is 17 support now instead of resistance? That's a complete change of environment in the market. So if we're going to come down and test 17 on the VIX and it holds and we move back, that's more ammunition for further downside in the market. So I'm going to be watching the VIX early next week to see if when we move down, do we hold 17 and bounce, or can we break back below it? If we can break back below 17, maybe we can get some sort of a bounce out of the equities market. So that's going to be key. Some stocks of interest. Taking a look at NVIDIA. Everybody wants to talk about NVIDIA because it's got an earnings report coming up. That was asked about in Tuesday night's TradeFinder as well. NVIDIA is priced for perfection. Its multiple is extremely high. They had this big move up. There's no question NVIDIA is operating on all cylinders. They're in the right place. They got the AI stuff going on. They are going to be a great place to be moving forward. But for right now, moving into this earnings report, they're priced for perfection. A lot of people are asking, does it make sense to go long into the earnings report? We are above the 50-day moving average, but I would just urge caution if you want to participate and you got some play money, a small position maybe, because they're going to have to blow away earnings, in my opinion, for NVIDIA to break higher. I could see a scenario where they come out with a really solid earnings report and the stock still moves to the downside because it is priced so much for perfection. So be really careful here. Don't load the boat. Don't back up the truck, in my opinion. If you want to try to catch a bounce, I don't think you're going to get anything like this out of the next earnings report. If we do get any sort of an upward bounce, I think it probably bumps its head around that wave 3, but there's still a wave 5 target up there near 600 that will be hit at some point, but it's showing towards the end of the year, like around December, maybe not necessarily on this earnings report. So again, I understand if you want to have a small position, but please be careful and don't go hard in there. We get Coinbase asked about all the time. Coin, I had made the comment that I thought if we came back down to 80, that could be a good buying opportunity. Well, we went right through 80, so we're a little lower than where I thought we would go, but we are now into an area here around 70 that has a lot of support. So if it breaks 70, then we have a lot more support at 60. So you can see we're in a corridor here of Coinbase, anywhere between 60 and 80. Last week we talked about, if you've got a pretty strong stomach and could handle a break of 80, we are a little bit oversold short term. We might even see 60. I'd be really surprised to see coin break 60, especially with that halving thing. Maybe Bitcoin comes back, maybe it doesn't. If Bitcoin does turn and head back to the upside, this could be a head fake shaking out the weak hands in Bitcoin. So we're in an area here, a corridor between 60 and 80 of good support. No doubt if we break 60 to the downside in Coinbase, that is your exit, because we may be all the way back down to 30. Don't see that scenario right now, but it's a possibility, so we need to show that. So I think we're a little oversold right now, but to be confident going long, you got to get back above 80 with some follow through, and that's a little nerve wracking. Everybody wants to know about Tesla. I feel like I sounded the warning alarms, and that wasn't just me. That was just simply listening to Elon, who was saying that, hey, we're going to be shutting down factories. The numbers the next quarter are not going to be as good because we're retooling the factories. We're updating them. We're not going to produce as many cars. And so finally people are listening. They're starting to take some gains here. Big move to the downside here. Breaking below 240 was really key on Tesla. We had a slight chance to hold at 220. We've broken below that. We do have a doji today, so maybe we can bounce back above 220. If we can get back above 220 with some follow through and come test 240 here, maybe, just maybe, we can get back above 240. But where's the catalyst? That's what I've been saying with everything that Elon's been telling us. Where's the catalyst for Tesla to move forward? I think, and y'all are going to get mad at me, but I think there's a pretty likely chance that we come back down to 200. There's a lot of support there. Now, if you're bullish, one thing you can hang your hat on, we are at a 61.8% wave 4 correction. Again, a strong fib level. So we're oversold short term. We have a doji. We're at the 61.8% fib level. So if we're going to bounce in Tesla, we are ripe to do it. If we can't bounce the beginning of next week with all these things I just described, yeah, I think we're looking at 180, 160, something along those lines. But this is as good as it gets as far as a potential bounce. And so can't mount that, then problems. Apple, we got to ask about that even in the live Q&A that we did over on the Hub Financial channel earlier. As I mentioned before, if you'd like to join us for that every Friday, go over to the Hub Financial channel and register. But the move to the downside here in Apple, we had such a really nice run. Great looking 45-degree angle move to the upside. That's what you want to see because the corrective moves are smaller. That's the ideal trending scenario. But it succumbed to the selling recently as well. Thought maybe we had a slight chance to hold 190. We didn't. So the next level is 170. I think that's where we're going on Apple. Can we hold there? The issue that I've talked about so often about shorting Apple, I just think there's better opportunities if you're looking for downside trades. Apple has so much money. They buy so many shares that they could step up their share buyback program at any time and create a bit of a bounce to the upside. The negative of when you're buying back shares like that is you're decreasing the float. And if you do succumb to market pressures, you can get some exaggerated moves. And perhaps that's what's going on in Apple here. So I do see 170. And if we can't hold 170, then very likely 160 there at the wave 3 high. So for me, I'm just going to watch and see what happens with Apple. It's just been my experience. It's a very difficult stock to short. Again, I think you find better opportunities elsewhere. So looking at a couple of our international markets, I did want to show the INDA. Yeah, it's broken down a bit, but so far it's holding in at 43, which is where it needs to. Another stock that had a great 45-degree angle run, really impressive move off the March lows. Pardon me, 43 is where it needs to hold. So far it has, and if it can't hold there, there's a little bit more support here at 42. Then we have to start talking about a few more nefarious things going on. But so far, pretty impressive in an overall globally weak economy. Again, I think tying into why rates are going up here, as well as the dollar, even though we know the Fed is near the end of the rate hike cycle where they go one or two more times. I think we're closer to cutting rates than continuing to raise rates. But, the markets are telling us that there's some concerns out there globally with the dollar and the 10-year. But as long as we stay above 43, I think you're okay. On the INDA, the negative would be we have broken below the 50-day moving average. Can we hold right here at 43? I don't think it's the end of the world if we come down to 42. A break below that, and I'd feel a lot differently. Well, I mentioned this in Tuesday's TradeFinder. I wasn't going to show the EWG until we broke either below 28 or above 29 because we've been in that range for so long. I was rounding those numbers. We went a little below 28, a little below above 29, but now we've got a breakdown here. Now, we're at a last bastion of support there at 27 on the EWG. We're a little oversold from that 10-day moving average. Once again, perhaps a little bit of a bounce attempt at the beginning of the week. But I think if we get that, as long as we don't break back above 28, I think this could be a short opportunity here as well. We break below 27. It seems like the next point of major support is down there around 25. So keep an eye on that 27 level. If you get a bounce up to 28 and it doesn't get above it, I think that's a short opportunity, once again, with the potential move down to 25. So I'm watching that one really closely as far as a potential short. So some more negativity than what we've had over the past several weeks, but that's what the market is telling us. We were ripe for a correction. We were hitting nearly a 20 multiple on the S&P, and that's a sign that things are normally overbought. The Moody's downgrade of the regional banks was the excuse to sell. How far down do we go? That's the question that we're leaving with you over the weekend. Thanks for your attention. Have a great weekend. Look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.